Welcome back. Thanks for joining us for another episode. It's been a couple weeks. Mike's got a nice tan from visiting Florida, middle of winter in Canada, so we're always jealous of that kind of stuff. But good to be back. We wanted to touch on obviously the major news that's going on this week, which is the war in the Middle East, and specifically something a little bit more related to our wheelhouse in the insurance markets, specifically as it relates to the Strait of Hormuz and all the marine cargo and energy that's moving or typically would move through that region. And the reality that since this war has kicked off, the insurance markets that would otherwise have insured those ships while they're transiting the strait have essentially canceled that coverage. So essentially, these ships are no longer covered. So I thought we'd give it a bit of background. Obviously, listeners are quite, this is probably going to be new information for a lot of people. So we'll keep it pretty high level. But essentially, what most marine cargo ships, so anything that's again transiting between two different countries via the seas, that ship, like anything else in the business world, requires insurance. And so there's some specialized structures and terms for it, but essentially it comes down to property and casualty, or property and liability, like everything else. And then there's a sort of a tack on that's unique to the marine world and some other industries as well, but it really specifically covers war risks. And what's happened since the war kicked off between the U.S., Israel, and Iran is that policy, or that wording that's attached to these policies for these major marine companies, allowed the insurance companies to give notice that they no longer have war coverage because they would be entering a live war zone. And so what it's effectively done is, in the last few days, it's halted all marine shipment through the Strait of Hormuz. And roughly 70% of global energy moves through that region, because a lot of it obviously is produced in the Middle East. That includes a bunch of different products. So, we could talk about like natural gas, compressed natural gas from Qatar, unrefined oil, distillates, refined gasoline, diesel, that kind of stuff. But anyways, it's just sort of like a whole bucket of different energy products that all move through there. And what's happened very recently is the U.S. administration, Trump specifically, has come out and said he's going to, or he has directed the U.S. International Development Finance Corporation, the DFC, to begin to backstop or provide underwriting capacity for ships in the region to continue to move energy. And so what's unclear is exactly how it's going to be structured, but likely and based on most recent information is it's going to be essentially a capacity provider to existing insurers. And predominantly those insurers are going to be out of Lloyd's of London. So that could be syndicates, or it could be standalone insurance or reinsurance companies. But anyways, the expectation is that the U.S. government is going to backstop some of that war risk. The figure I've read is 205 billion US. So in reality, if you look at how that compares to the amount of coverage from Lloyd's, it's going to be a drop in the bucket. So it's not going to do a whole lot, but it's going to at least ideally get things moving. And additionally, the U.S. Navy will act to sort of chaperone vessels through the strait, to offer some level of security if they do come under fire or whatnot. So just wanted to sort of put it back to the group to see, I guess, from a layman perspective, learning that insurance has potentially halted a large portion of the world's energy markets. And as a result, we've seen some pretty massive increases. I just got a text actually from the wife saying that WTI just hit $80 a barrel. Natural gas in Europe. So Europe is highly reliant on imports. They still produce quite a bit of stuff domestically, but they import a lot. Anyways, their natural gas prices have almost doubled in recent days. So anyways, there's going to be a potential knock on, but I wanted to get your guys' feedback on exactly, like, I guess, how you view this with your insurance hat on, and what maybe people can take away from this in terms of learning about how global commerce actually works.
Yeah, I guess what's really interesting is this is kind of where insurance started. If you think about it, you talk about the Lloyd's of London, the original, at the shipyard in London where they were insuring, loads, cargo on boat crossing open waters. That's kind of where insurance started. So it makes total sense that all these loads that are crossing this Strait of Hormuz are insured. What's surprising to me is that it's the insurance that's halting the flow of energy, as opposed to an Iranian retaliation, which is potentially to come. Like, the Iranian retaliation hasn't come yet, and that is like what is the big threat right now. If they retaliate, 20 to 30% of the global oil flows through that Strait of Hormuz. So that's scary if they do retaliate. But you're saying, Kyle, that it's already coming to a standstill because of the insurance requirements on these vessels that can't cross?
Yeah, exactly. So just to clarify, but based on what I've read, there have been incidents of drone attacks on vessels in the strait since it kicked off.
Oh,
So
so they
it's
already
not a
started.
hypothetical. Yeah, it's not a hypothetical. And let's be honest, like there was also a whole bunch of activity last year with militias, throughout that region that were essentially, again, trying to disrupt that global supply, whether it be energy or otherwise. But the big one is, again, since this has kicked off and since there's been that increase in threat, the coverage has been pulled. So Lloyd's of London, a bunch of the cover holders have essentially triggered a clause in the policy that says with a roughly a 7-day notice period, we can rescind your war risk coverage. So these ships no longer have coverage. And so just to put it in perspective, so these are, potentially billions of dollars worth of not only equipment, but also cargo, what they're carrying. Not to mention the liability risk. So if a ship sinks and releases, X cubic liters or whatever of oil or refined distillates or whatever into the water, not to mention loss of life, all that kind of stuff. So there's a huge amount of risk associated with moving this, the equipment and the product through these areas. So
What would be interesting to talk about from an insurance angle is, would the liability, their third party liability and the pollution liability, apply if, they were taken on maliciously? Like, if a cargo vessel is, taken on maliciously through an air drone or missile attack, and you're right, there's those pollutants that seep into the waters. How can a policy respond to that if there's no legal liability on their behalf? Like, what's the liability on behalf of that carrier that's just got attacked?
well, they would be the cause of the loss, right? So I think that the challenge is again from a liability, from a legal perspective, would maybe different to how it's handled in the insurance world. And
I guess it's the duty of
Andrew,
care. Yeah, the duty of
well,
care.
and the problem is again, even if you have a legal liability, it's not necessarily caught by the policy. If you buy a general liability policy, there's a bunch of exceptions and exclusions to that coverage. So one of which is war. So if the insurance company that insures, let's say, otherwise normal pollution, or whatever happens in typical operations, if it happens because it's in a war zone or because it's been struck as part of an ongoing war, that insurance company is going to decline it. They're going to put their hands up and say, we are not responsible for paying this. We're not indemnifying you. That's why they had to buy these war risk coverages. The other thing that I find quite interesting is that this specific type of coverage related to marine is called P&I, which stands for protection and indemnity. And P&I actually has evolved similar to what you were talking about with Lloyd's. Marine is very unique in the global insurance markets, and it's actually evolved to a point where insurance companies themselves, the markets, don't actually offer P&I directly. Like you and I would buy liability coverage for our car. You can't go out and buy P&I from a traditional insurance broker. What ends up happening is that they have clubs, and the clubs actually group together in specific P&I country groups. And so each layer of this sort of, they're essentially mutual insurers. So all the members, which are marine, either charterers or carriers themselves, they pay into a pot amongst their club, and then each club spreads risk amongst themselves, either within a country or between countries.
So how
And
does that
then
differentiate from like a captive, Kyle? Like, how would
it's
that
identical to a captive. It's retention of risk, and it's trying to spread it amongst the reality with a captive is if you got a bunch of people together. So for example, every restaurant in California had a captive, and every captive joined a pool of California restaurateurs. They would spread risk amongst every restaurant captive within California. And then at the California level, they could then again group together with a US group captive, or they would then spread that risk to a reinsurance market. So it all comes back to that capacity, which is at the reinsurer. which is again where the U.S. is likely to step in and say, "Hey, we'll provide you that backstop." But for the most part, it's interesting because you're not seeing the commercial market hasn't been able to provide this product to the marine industry.
Interesting. Interesting. And what started as like just correct me if I'm wrong. It seemed like this war has started over, the U.S. stating that that they wanted to stop Iran's nuclear development. That was the big reason why this war started. But it's becoming more of a global war, and now it seems like there's a lot other things at play. So energy being the big one. Power control. Now other countries are getting involved. Obviously, Iran's going to be backed by some of the other powers such as Russia or China. But it's very interesting seeing this formation of this Western bloc and kind of like the Eurasian bloc, which is China, Russia, Iran, North Korea. And now it's like, is NATO going to support the U.S. in this war? Like, is NATO going to be backing the U.S. in this war? I don't. It's becoming very geopolitical, and a lot of countries are getting pulled into this. I know the UK just mentioned that they're going to be providing some air support for the U.S. and I think they're stationed just outside of is it Qatar? The waters outside of Qatar.
Potentially, yeah.
Yeah, but so it's becoming quite the world a potential for a world war here. From what started
Yeah,
as
How many
just the
countries
U.S. and
are
Iran.
how many countries are, involved right now? Do you guys know?
well, there's a bunch in the Middle East that have been bombed by Iran, right? Like, but for the most part, they're not committing troops or weapons or anything like that. But most of those countries, again, Saudi's been hit, Qatar, Kuwait, UAE, Dubai had some rockets come down.
I heard that
Um,
Qatar entered the war, recently, but because they shot down apparently one of their fighter jets shot down some other, some fighter jet or something like that from Iran or something like that. Uh,
Potentially, I think the big risk again is that the energy infrastructure. And just coming back to Mike's point, like one thing that's been quite uh, is being discussed quite a bit here in the local sort of energy world is the fact that Iran supplied embargoed oil to China. So roughly 80% of the oil that they would produce was going to China. And same thing with Venezuela, right? Venezuela, the vast majority of their shadow fleet, it was Russian ships moving energy to China. So it's there's a bunch of stuff going on underneath the surface that isn't necessarily what global politicians are talking about, but it's had a massive impact and will have a potentially a massive impact on how energy flows. And so if you're trying to cut off, like we've actually I think we've talked about this in the past, where if the U.S. is trying to cut off the energy supply to China, it harkens back to the Second World War when they were doing the same thing to Japan, and they essentially strangled energy imports to Japan, and Japan had really two choices. They could sort of try and produce their own energy and walk back everything they'd said, or which is what they did, and they kicked off and attacked Pearl Harbor. So, it's and a lot of the China hawks in the U.S. government have said, China is angling to take over Taiwan, and we need to disrupt their energy. So if they're energy constrained, they have no way of waging a war against Taiwan. Again, I don't know how realistic that is or how accurate it is, but it is coincidental that the two major military operations the U.S. has undertaken this year, being Venezuela and Iran, both have very, very direct, substantial oil and energy ties to China.
Yeah, yeah. Kind of coincidental, isn't it? There's no doubt, regardless, there's no doubt that this is going to put a lot of pressure on other countries because I think most of the countries in NATO have supported the U.S. in terms of like, you know, giving them the green, not necessarily giving the green light, but not opposing them taking military action. And they're also helping defend regional bases. But, is there going to be a stronger requirement if this thing escalates? If this thing escalates, then what? There's going to be more of a requirement and more support required than just saying, hey, go for it. Like I think Germany, the US already put some pressure on Germany, and Germany said they want nothing to do with it, or they pushed back. And I don't think the US and Trump was very happy about that. So I don't know. It's going to create a lot of divide here, I think.
Yeah, I don't know, I'm curious your thoughts, Andrew. Like I read that it was the opposite, where the U.S. didn't tell anybody, including Canada, and everybody was ticked off about it because NATO didn't know, and U.S. just went in on their own, and they said we don't want to tell you because you're going to compromise the operation. Very similar to what they did with Venezuela. And the one thing I heard, I didn't hear was Germany, but the one country in Europe that I heard was pushing back was Spain. Spain essentially
Spain.
said, "Get your planes out of our bases.
Yeah,
You're not
Germany said
allowed."
they wouldn't commit to helping, but Spain was a hard no. Spain is a hard no. We're not getting involved at all.
Yeah. What do you think, Andrew?
Yeah, I think it's quite interesting that they just kind of went in and not notify anybody. But I think that's part of how they were able to succeed in a lot of these tactics, right? If they were to announce it, I don't think it would have been as effective as they would have hoped for. So I think because of the secrecy and the fact that they kind of went in with Israel with their level of intelligence and everything, that really kind of probably helped them achieve the goal that they set out. Now the interesting thing is you're right, like all the allies and everything like that. It's going to be interesting how they get involved, and especially Canada. I'm going to loop Canada back in because we're all Canadian here, and I think it's going to be interesting to see how this whole thing will evolve because while all this is happening, the U.S. is choking China of all its oil resources, like you're saying, Kyle. Canada is going to make partnership with China. You know, so it's kind of puts Canada into this really weird position. And I would love to hear your thoughts on that as well. Like, what is Canada's position? What do you think Canada's position in all of this? Right?
Well,
Like,
Well,
are
Canada supports the U like right now, I know this wasn't announced. You're right, everybody, but I think everyone saw this coming. Like we knew Trump, it was only a matter of time for Trump to go in. And since he's gone in, there's been really no backlash from most of the NATO countries. From what I've read that Canada, like Carney's come on, I think Carney's come on and said he supports, the US acting to prevent Iran from getting more nuclear weapons. So the support is there, but Andrew's right. It's very interesting because Canada is very aligned and doing a lot more business with China, and China, I assume, is backing Iran. I don't know what's China and Iran's involvement with each other.
I think China is essentially, getting like Kyle was saying, like China was getting a lot of oil and energy from Venezuela and Iran. So essentially, the US has choked these 2 points that, where they're getting their oil and their energy, essentially declaring, like something against China, right? Like indirectly they're declaring war against them, right? Because, these are two important sources of energy for them. So and Canada and on the flip side is going to, you know, uh, do trades with China. So it's kind of puts Canada in a weird position. It's like, who's our partner? Are yeah, Carney said they're supporting the attack on Iran, but here on the flip side, they're shaking hands with China and doing deals, trade deals and things like that. So who are we with? So it's kind of Canada kind of in limbo, like that's essentially what's going on right now.
Yeah, and supporting the objective and being part of the military action are two different things. So Canada right now is supporting the objective, but there's no military involvement, from my understanding, right now.
No, not right now.
No, and I don't think that there will be. We don't have a navy really, right? Like there's not a lot that we can do. And to be fair, the US doesn't really need the help, right? Like I regardless of what people will say about like the size of the military and the navy in Iran, like it pales in comparison to the US, much less US and Israel and some of those other Gulf states that have been buying US weapons for generations. So I do think that, coming back to the NATO point and how Europe has responded, I do think that it's interesting because it's arguably the first time in our lifetimes where the hegemonic power, the US, the dominant power in the globe, has said, you know what, we're just going to do what we want. We're not going to tell you. We're not going to ask for your permission. And it's ironic because I was just pulling up, I saw a tweet that was hilarious, which was the head of the EU, European Commission President Ursula von der Leyen, said when it kicked off last week, I think it was Friday, she said, "Oh, we've scheduled an emergency meeting to discuss that de-escalation, and we've scheduled it for Monday. We're going to take the weekend off." And everybody in the US was like, this is the most European response to an active war ever. Like, what would have happened if the US was like, we need to go in now? "Oh, we'll talk about it next week, you guys." So I don't blame him. I think, the map is changing, the globe is changing for some and for the better, for others for the worse. But I don't think Canada and the EU really have a part to play. I don't think they want a part to play. I don't think there's anything really to be gained other than appeasing the US. And I think for this thus far, Trump has made it very clear that they don't want anyone's help other than, let us use your bases or the bases that they maintain. Like, we don't need your jets, we don't need your ships. So I don't know. It'll be interesting to see. And regarding like what Andrew's point about the China, trade deal and stuff like that, you know, he, Trump also caused Carney to walk that back almost immediately because he essentially said, hey, if you're just going to backdoor Chinese goods to try and get around tariffs, we're just going to tariff the shit out of Canada. Like, you're not, this isn't some sort of a new jump off point for Chinese goods into the US market. And Canada doesn't, we're not a major consumption country. We're barely going to move the needle, if we ramp up our trade, our consumption with China, and vice versa. I was talking about with family and friends about, all of these people coming knocking since the war for energy. We have absolutely no way of getting them energy. Like, putting in perspective, we're trucking diesel around Canada. Like, we're railing diesel between different sides of the country. Like, we're really going to start building infrastructure that in 20 years we can ship, energy products around the world. Like, we're so far behind the curve, it's not even funny.
How much of China's, how much of China's oil comes from Iran? Like, I know China is Iran's biggest customer of oil. I think 80% of Iran's exported oil was going to China. But how much of that, how does that convert to China's needs? Because what's going to happen if they get choked off from their oil supply and energy supply? Like, right now, everything's okay. Like, there's no military involvement from China right now. But what happens if where are they getting their oil from?
Yeah, so good question. So I just pulled up a couple charts. So percentage of total oil. So 17% of China's total oil imports last year came from Venezuela and Iran. So to put that in perspective, 87% of Iranian oil exports did go to China. 55% of Venezuelan production went to China, no longer goes to China, it goes to the US. So let me see if I can pull up a barrels per
So it's
day.
funny how the U.S. is hitting all of these major exporters of oil to China. They're China's their biggest customer of energy for Venezuela and Iran. So where's China getting the other 80%,
So a
83%?
lot of it is Russia. So I think
Russia.
I read something like 50% of Russian output goes to China, which makes sense because they're right next to each other. And then there's also going to be other countries in the Gulf. So this other figure says that 5 million barrels of crude oil, specifically crude oil product, went to China via Strait of Hormuz. So if you cut that pipeline off or that transit area, then obviously that's constraining Chinese imports.
Hmm.
Um,
So they would be opposed to having this war because it's going to
oh
put
yeah,
it's going to
yeah,
put a lot of
absolutely.
strain on them, not just from the Iranian oil, but the oil flowing through that Hormuz Strait.
Yeah, so based on 2025 numbers, top 10 countries that export to China, Saudi and is the first at 1.5 million barrels. Iran is second at 1.4 million. Russia, Iraq are both at 1.2 million barrels. Brazil just under a million, and then we've got some smaller numbers: Oman, UAE, Angola, Kuwait. Venezuela is just under 400,000 barrels, and then total all of the countries combined is 1.5. So it's a big knock for sure.
Yeah, resources are becoming, I don't know, it just seems like it's all about the resources right now.
Yeah,
Oil,
yeah.
energy, water, it's just a giant need, I guess, as we develop and the world evolves, there's just more and more need for energy. So I don't know, this must be what's behind all of this, if
It's
you think
always
about
been
it.
energy, right? Like energy
Yeah,
has
it's always
always been
been.
the source of war, right? Like it powers everything. So it's so critical that y- it's like when you maintain the control of the energy, you pretty much control most of the world, right? So especially these trade routes are so key.
Yeah, yeah. It seems like the U.S. is trying to secure all those key energy sources and trade routes. With Greenland, with North. We talked about the last podcast, the North. The Arctic, which was that potential large pass.
Yeah,
Nothing's passing through that area. What was that area called again? The
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 North
large
Passage.
the North Passage, but that's not really in use right now, right? This is a potential passage.
I don't think it's in active use. There've been icebreakers that have gone through there to demonstrate that you can actually ship, but the expectation is that it at one point in the future could be a major trading route. So one other thing I was just wanted to add in here for Strait of Hormuz. So 2025 percentage of total energy imports that originated in the Gulf states and went through the Strait of Hormuz, 90% or more is affecting countries such as Japan, the Philippines, Vietnam, Myanmar, Bangladesh, Pakistan, India, Malaysia, China, South Korea, slightly less, but very close to 80%. So a huge amount of energy goes through that part of the world.
India will be another interesting one to see how India reacts in all of this, especially considering that this is a major source of a major pathway artery of energy for them.
Yeah. Yeah. And that
And
was
they're really
another,
strengthening the relations with the US. So like they've been
yeah.
really strengthening the relations with the US.
Well, and it was also interesting because there was some headlines around when Carney met with Modi, and Modi was essentially like, we will buy as much energy as you can send us. Like we are an open tab. And the reality is like we don't have the energy. We can't get it to them. We have the energy in the ground, but we can't get it to them. And there's been all sorts of people bringing up when the Chancellor of Germany was here at the start of the Ukrainian war, where they were getting squeezed for energy as well from Russia, and they came to Canada to say, "Hey, like sell us some gas." And Trudeau at the time said essentially, "There's no business case for it." And it's like, you guys, like we can take the finger out whenever we want. Like the world is happily, waiting to give us money. We just need to get it there. And for whatever reason, there's just not the political or the social will to do it.
Yeah,
So
that's exactly what it is.
You think it have to do with the net zero agenda?
I think that's a big part of it for sure. I do think that as well. Like it's, I think there's a certain amount of animosity and jealousy between different parts of the country. Like the irony is the second that Quebec starts to develop or Ontario starts to develop energy resources, they're going to get a red carpet from Ottawa, from the federal government. Whereas if Alberta or BC, we're trying to create pipelines and stuff like that, it's not the same thing, right? And it just seems like it's different rules, different people get different rules. So
There's
it'll
way
be
too much
interesting to
red
see.
tape and bureaucracy too between the provinces. I think we talked about this last time, how Alberta's so pro, let's get the energy out, and then you have their neighboring province, BC, which is like pro green and doesn't want to tap it, wants to protect everything. You also have to think about First Nations as well. First Nations is another, you know, uh, bureaucracy that you have to deal with to extract anything from their lands. That's all protected. So
Yeah, I think you find, like, especially based on the Alberta example, like as long as they get their cut, they don't really care. And we find, as an Albertan, I find the BC position quite hypocritical because they're one of the biggest exporters of coal. Coal's arguably far worse than unrefined energy products. So I think there's a lot. I think most of it is politics, but I think that it's a lot of I'm not getting my cut, right? Like I'm not getting, the golden goose wants to traverse my land, and I'm not getting a big enough piece of the action, frankly. And I think that might change. Like I think as oil has gone up, if it starts to surpass $100 a barrel, that changes the economics of everything very, very, very quickly. So it'll be interesting to see. And I do think that, like to your point, Andrew, I think that the green agenda is starting to peter out. I think it's lost a lot of major supporters in the last year. And I think people are just sort of coming around to realizing that a lot of it was exaggerated, and frankly, you still need energy, right?
so
Like
you
if
you
you,
think
if you
that
want to win wars, you need energy.
you think that the hurdle of getting the buy-in from native lands and the First Nations is not so much of an issue if they're getting their piece of the pie?
Yeah.
So
Based on
how would that
experience
work
in
with
Alberta.
Canada, with Alberta wanting to separate? So say Alberta, the referendum, was in favor, which you needed, what was it, 40%? It's a low number. Like they only the vote, they only needed like a 40%
So
percentage vote.
to hold the vote, or to the actual after the vote. So based on the government of Canada, the decision from Supreme Court following the Quebec stuff, it's 50 plus 1%, 50% plus 1%. So it's
Okay, so maybe
majority.
that's to hold the vote then. Are you saying that's to hold the vote, or is that to separate?
That's what the vote needs in order to pass. There needs to be a very clear majority that wants to separate. So the majority being 50% plus one vote.
I heard it was lower, but we'll confirm that. But I think with native land, that would be very difficult. Apparently, I was speaking to someone from the First Nations, and they were saying that it would be very difficult for Alberta to separate due to how much native land is held and their rights to that land and their say, and they wouldn't be
It's
for it. They wouldn't support it.
I think the difference between Alberta and BC, so we've also talked about this, but the contracts, the treaties were very, very strong in Eastern Canada. And as the Commonwealth moved west, these contracts became a little bit less strict and enforceable. And so you see a lot of, like, we're seeing all these land claims amongst hundreds of Aboriginal tribes and bands historically based around, like, let's say Vancouver, Lower Mainland.
Yeah.
The difference in Alberta is that you've got some pretty ironclad agreements and treaties that include that the land is ceded, right? And so from a legal perspective, and you can talk to people on different sides of this, but there is definitely an argument that says that the land is crown land, right? And if Alberta separates, if it's crown land, whether it's has a Aboriginal tribe on it with reserve rights, treaty rights, it's no different to any other crown land. And it would be awarded. Alberta would take it because it's their crown land. Now, the difference is there's also contracts that Alberta have signed when they joined the Confederation, which is essentially saying our land is now part of Confederation. So we would have to be reversing that. But again, like from a constitutional law perspective, as long as you could pass your own laws, right? Like, and if the judges say, yeah, we're going to enforce the laws as they've been written, that's it. So you could look at it and potentially go in either direction. But anyways, I think that's a far deeper conversation, and there's a lot that needs to be fleshed out. But the information that I've read, there are people that are on both sides of the argument. And I think that generally speaking, it's not as strong. There's going to be some judges that have said, this is a bigger deal and this is going to be harder to achieve. Whereas others have said, like, you just need to pass the law and make it, enforce it.
Yeah,
So
that'd be an interesting
we'll
one.
see.
But you're right. You were right about the over 50%. So the 40% number I heard was, if they had 40% of the people opposing it, they would lose because it has to be over 50. But apparently, closer to 55 to 60 would make it more solidified for something as significant as as a secession. So that's where the number was. They're saying all it takes is 60%. So 40% of people say no. That's too bad. Like,
Yeah. I don't know. And again, like, there's a whole bunch of questions as well following secession. Like, if Alberta actually does secede and they create their own independent nation within, like, the bounds of Canada, it's not going to be like Canada. There's no guarantees that suddenly BC or, there's been a lot of talk actually recently last year about Alberta getting energy products to Tidewater via the US. So going through Montana, Washington, stuff like that. And those governors of those states have actually been quite receptive. Again, as long as they get their pound of flesh, they're far more amicable to, development and pipelines. They've got tons of pipelines already. And anyways, it would be potentially politically a lot easier to go through the US. And it's ironic because the second those announcements were public, BC's premier, David Eby, was essentially like, like knocking it. Oh, they should go through Canada. It's a Canadian resource. And again, I personally think that that's just a pound of flesh argument. Oh, we need our cut, yada, yada. But if it is an independent nation, it can, contract with whoever it wants to contract with. It can do whatever deals it wants to do. There's no federal oversight, much like, with this NATO war conversation. Like, there's nobody to monitor what they're doing. They can just do what they want to do, what they feel is best for the province and for their energy exports.
yeah.
So anyways, I do think it's worth tying it back. We're running a little short on time, but tying it back to how, everyday Canadians, small, medium business people, especially, maybe some predictions, 3 predictions of each of us come up with something where, it doesn't need, we can spitball a bit, doesn't need to be set in stone. But how do we think this might, in the maybe short term or long term, how this might impact people on the ground in Canada? Andrew, what do you think? You've got some pretty strong opinions this episode, so.
Well, I think this topic is not really a topic that I'm 100% familiar with, but I guess for every day, I think if the war continues, if crudes continue to creep up, I think that's when everybody's going to feel it, right? Because energy is the lifeblood of the world, and I think if that's going to happen, and we're not in a position to use our own resources, we're going to start to feel the pinch. We're going to start to see prices at the pump go up. We're going to see prices going up across the board. So, our are all this effort that we got, I guess we've all put into fight inflation,
Mhm.
essentially be waste because everything is going to go up in price, right? So at that point, like I feel the Bank of Canada will have less levers to pull on because the interest rate is already pretty high, and they had to lower it to essentially not suffocate the economy. So they kind of gone to this point where it's okay, but it's not even low enough because we're seeing the housing market suffer very, a lot during this high interest rate environment. So if crude goes up, inflation goes back up. Are they going to increase interest rates, or are they going to, have to lower interest rates, which is probably unlikely at that point? Well, like that, I think is going to be an interesting thing to see because it's going to have a big impact on the Canadian economy. What do you guys think?
Yeah, I definitely agree. I definitely agree. It's definitely going to hit inflation. Everything, energy touches everything from producing products to shipping products to, even importing and shipping widgets that make products, gas, heating your house, fueling your cars, powering your house. It just hits everything. So yeah, and we've been having inflationary issues in Canada. I read a statistic not too long ago about how we've had the highest grocery inflation in the world. Like in the recent years, our groceries have gone up double digit percentages, and we feel it as Canadians when we go to the grocery stores. We feel it. So inflation has been an issue, real inflation, not the inflation numbers they're posting, and will only add to that. So for individuals, for consumers, the cost of living is going to go up. That's going to put pressure on individuals to make more money or try to earn more money, but that's going to put more pressure on businesses to be able to support those wages and to be able to support the additional costs of running their businesses. So that's just going to drive up costs even higher. So it's just a vicious cycle of inflation, basically, and then I would say political turmoil as well. There's going to be more political pressure now. There's going to be people in the camp that support this war, and there's going to be people that are against this war. So there's going to be a lot of political pressure as well, and separation on individuals that have different views and opinions. That's my thoughts. What do you
Yeah,
think,
I agree
Kyle?
with both what you're saying. I think I would take a different approach, slightly in terms of how can you potentially guard against it. And coming back full circle to how we started talking about insurance, I do think that it's worth business owners, frankly anybody that has the you know time and energy to look at it and talk to a broker. This is potentially a plug for Boardwalk as well, you know, to look at stuff like political risk coverage, look at, contingent BI. So if you've got a supplier overseas that, is potentially going to, suffer consequences from a trade or energy embargo or whatnot, there's definitely products. This is risk at the end of the day. And there are, products designed, insurance exists for a very good reason. And that is to try and transfer that risk, that cost of risk, to someone else. And I do think that, granted, for many of us, this has never been an issue in our lifetimes. So it's probably never been an issue that we'd needed to think about or a product we've needed to buy. But, this is exactly what they're designed for. And, you could be importing something, you could be selling something to another country, your own costs, if you're suddenly your input costs related to energy or the upstream impacts of those products that are feedstock for your products start to go through the roof 2 or 3 times X. that's going to have a massive impact on your top line revenue. That's going to impact the amount that you can actually sell or how much you can sell your goods for. And so anyways, it's all interrelated. And I do think that it's a good opportunity for people, if they're not familiar with it, to become familiar, because it's definitely, I don't think it's going to be disappearing anytime soon. And it's one way to, again, sort of reduce that risk for the future if there is a lot of uncertainty, which there is. So.
I love the plug, and I think that's a great opportunity for our next episode to talk about trade insurance products. We've got trade credit, we have trade surety offerings. So that's something we should talk about in our next podcast. That's because that's going to become much more relevant, like you said. And these are many products that historically most businesses haven't really put much thought into. So maybe we can dive a little deeper into them in the next episode.
Sounds good. All right. Well, let's leave it there. Thanks for joining us, and we'll see you on the next one.